From the warehouse to your doorstep, logistics keeps America moving. But right now, the sector that delivers everything is delivering some warning signals. Welcome to the Commercial Pulse update for October 28th, 2025. The Experian Commercial Pulse report is a bi-weekly snapshot of the US economy and its impact on small businesses. Inflation kicked up slightly in September to 3%, up from 2.9% in August, suggesting continued pricing pressure in the economy. Now, due to the government shutdown, the next jobs report from the Bureau of Labor Statistics is now expected in early November. The most recent information from ADP, however, shows private businesses cut 32,000 jobs in September, with all cuts coming from small and mid-sized businesses, and primarily in service-related businesses. Hiring momentum has stalled. Employers posted just 117,000 new jobs in September, the weakest September since 2009, and a 58% year-over-year decline. Business optimism followed suit, dropping to 98.8 from 100.8 in August, marking the first decline in 3 months, according to the National Federation of Independent Businesses. Consumer sentiment also softened, falling to 55 in early October, 22% below last year's level, per the University of Michigan. And these signals point to a cooling labor market and weakening confidence as we head into Q4. On the credit front, the Experian Small Business Index rose to 37.4 in August, gaining 4.6 points from July. While this uptick suggests renewed momentum after a sluggish start to the year, the index remains 8.8 points below last year and sits below the neutral 40 to 60 range, indicating ongoing constraints in small business credit access and financial health. Now, let's dive into this month's spotlight, the logistics sector, the engine that powers commerce across America. Over the past decade, private logistics companies surged, with their numbers doubling and peaking in Q4 of 2023. And since then, we've seen a 2% contraction in total firms. Employment growth mirrors this trajectory. Between April 2020 and July 2022, logistics employment jumped 25%. But since then, just 1.5% growth, reflecting a broader deceleration across transportation and warehousing businesses. The Logistics Managers Index, or LMI, dropped to 57.4 in September, its lowest reading since March. And while still above the 50-point expansion threshold, stress fractures are appearing beneath the surface. Here we can see inventory levels have climbed steadily since the pandemic. But here's the pressure point. Inventory costs have been rising consistently since late 2023, and this cost squeeze could trigger inventory reductions in the months ahead, which would further soften the LMI. Warehouse utilization is also climbing, pushing warehousing prices higher. As costs escalate, businesses may become more selective about storage, which could eventually pull utilization back down. Transportation utilization has hit 50, right at the contraction threshold. With demand declining, capacity has expanded, driving transportation prices down since January. The credit data tells a striking story. Since the pandemic, logistics' share of monthly commercial credit originations has plummeted from 4.5% to just 0.5%. Yet despite that drop, outstanding balances in warehousing have pushed beyond pre-pandemic levels. Trucking still dominates, representing 82% of open commercial credit trades in the sector. Commercial cars remain the instrument of choice, reflecting both the influx of new logistics businesses and the ongoing demand for accessible credit. Finally, the risk picture is shifting. Late-stage delinquencies are rising, contributing to declining commercial credit scores across the sector. And if this trend persists, lenders may need to recalibrate their risk tolerance and exposure to transportation and warehousing. And there's a lot more on the logistics industry in the latest report, so please subscribe. If you found this update valuable, explore more at our Commercial Insights Hub. Also, subscribe to our YouTube channel. And if this video has sparked ideas, reach out to your Experian account team to start a conversation about how insights like this can help your business. Last, remember to keep informed so you can stay ahead, and we'll catch you on the next one.